If tomorrow someone came to meet me and said, you're allowed to invest, but you can only invest in 5 assets for the next 10 years, no switching, no reacting to news, no chasing what's trending, just 5 assets locked in. Now, most people would panic at this idea. I mean, obviously, including you as well, because investing today feels like it needs to have constant activity. But here's the real truth. Over a 10-year period, for passive investors, wealth can be built by positioning yourself correctly for different economic regimes as well. So today I'm going to build this portfolio from zero using 5 lakh lump sum and a 25,000 rupees monthly SIP. And I'll explain why each asset class deserves a place before we actually touch the math. Now, this portfolio is built on one idea. I don't know what will happen for the next decade, what it will look like. All I know that it will contain growth, fear, inflation, and some shocks on the way. So instead of predicting the future, I am going to build assets that benefit from different futures. So the first asset is Indian equity. Why? Because usually over long periods, equities are the only asset class that compound faster than inflation. And within equities, India has a structural advantage. Number one is rising incomes, expanding consumption, formalization of the economy, increasing financial participation. And this is not about one sector or one stock. This is about owning the engine of India's growth. But here's something that's also important. Equities are volatile. They will test your patience and mine. They punish emotional investors. So I will not go all in here. I would allocate 40%, enough to grow meaningfully, but not enough to crash and break my brain psychologically. So from our 5 lakh, 2 lakh will go as lump sum and 10,000 will go as SIP per month with the assumption of a 12% long-term CAGR. When you both compound this correctly for 10 years, this grows into a portfolio of 29 lakhs. Not bad, because markets are also very weird. Now, asset number 2 will be global equity. And let me tell you something very uncomfortable. Most Indian investors are confident only about India because every country looks invincible until it's not. So the second asset I like to add is global equity. Now, this is not America versus India. This is about diversification of risk, and this is my money. So global equities will protect you from domestic policy mistakes, currency depreciation, India-specific slowdowns, and it's not just US, it's global. So over here, I would like to allocate 20%. So coming back to the math again, 1 lakh lump sum and 5,000 rupee SIP. And here, I will assume only 10% in INR terms, CAGR, right? Not 12%. So after 12 years, this grows to a 12.8 lakh portfolio. Now, at this point, notice something. We're not chasing the best performer. We're removing single country risk from our future as well. And with that, our portfolio is growing quite well. Number 3 is gold or silver. Now, here comes the most misunderstood asset in investing. Now, they exist because of the financial system, and that is not perfect. Historically, it performs the best when inflation surprises everyone, real interest rates start falling, currencies weaken, and markets panic. And gold is what works when confidence breaks. So I will put 15% into gold. Not too much, not too little, but the perfect amount. And here, if I had to go back to the math, 75,000 would be lump sum and 3,750 would be in an SIP with an assumption CAGR of only 8%. After 10 years, this gold will become 8.5 lakh rupees. Now you see how I'm taking the lowest and the worst case assumptions, but still our portfolio is looking very beautiful. Number 4, the asset that I'm using is bonds. Now here, let's talk about the asset that actually saves our portfolio. And bonds only exist for one reason. They give you stability when everything else around you is screaming. When markets crash, bonds don't just protect capital, they protect your behavior because they will give you liquidity and they will give you predictability as well. And it also give you the courage to stay invested. So I would like to put 15% of my money into bonds. Coming back to the math, 75,000 rupees lump sum, 3,750 rupees in SIP, CAGR 7% only, which is AAA rated bonds. And after 10 years, these bonds also grow to a value of 8 lakh rupees. Now, this asset will not win races for you, but it will make sure that you don't quit the race or you don't have a big, huge loss. Asset number 5 is called yield assets. Now, every long-term portfolio needs cash flow, something that generates income, grows slowly, behaves differently from equities. So the 5th asset we are going to look at is a yield generating asset. It can be rent linked income. It can be infrastructure income. It can be REITs, long-term contracts, anything. Here, I will like to allocate 10% of the capital, which is 50,000 rupees into lump sum, 2,500 rupees into SIP. Assumption Kager will only be 9%. And after 10 years, this entire corpus becomes a 6 lakh corpus. Now, this asset will add basically a rhythm to the portfolio, which will give me a constant yield that also compounds over a long period of time. Now, let's add all of this up. You invested 5 lakh rupees upfront, 25,000 every month, 35 lakh in total. And after 10 years, your portfolio value has gone to around 64 to 65 lakh. And the effective IRR of this is approximately 10.4% nominal. After inflation, it is 5% real. And this is how real wealth is built. Now, this portfolio obviously will not impress a lot of strangers, but 10 years later, it will quietly put you ahead of most people because many people in the market today are just moving from one stock to another, paying a lot of taxes and a lot of options and futures and all of those nonsense. Because the real edge in investing is not actually intelligence, it is survival. It is live to fight another day. And if you like this video, might be boring for you traditional investors who want only mid cap, small cap, micro cap, but this is sadly how real wealth is built. It is boring that actually makes a lot of money. So if you enjoyed this video, hit the like button and also subscribe for more such interesting finance videos. This is me, Shashank Godpa, signing off. Take care. See you guys. Bye bye.